Hello traders, Matt Chapman here, the creator of the trademark Trap Traders concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date's Monday the 24th of April 2017, and the trap we're going to take a look at today is a structure failure return trap. And a structure failure return trap occurs when you've had a fairly directional bit of price action. So the hard right edge, if you just cordon all of this off and pretend it hadn't happened, right, so this hasn't happened yet, that would have looked obviously very enticing, and that's the point. People are making decisions based off historical patterns, based off the price in the here and now, and they're not paying any attention to the fact that, you know, this area to the side of all our charts, as in this case now, is going to fill. It just requires some time, but people don't think of it in those terms. People buy and sell at the hard right edge based off of what I've just explained, and that's what gets them in trouble, because no sooner obviously did these people go short thinking that's going to follow through, that retracement price has gone strongly against them. So let me just clear this up for a sec. So there you go. So the important part is that price actually does sell off, and that's what gets you to commit capital, because if you were eyeballing this particular drop up, you know, and you're a retracement trader and you're going to take a trade on a pullback of a prior level like that, right? You're eyeballing the trade, you're considering taking the trade. What's going to get you to actually come in and pull the trigger and take some risk? Which suggests here that it's the price action itself. The entry cheese is what I refer to that as. Right? It's the cheese that tempts the mouse, or in this case the trader. And once you commit and you come in, then it goes strongly against you. And people might say, well, people will have got stopped out that have put the stops above that structure, and some will have done, of course, but there are others who won't have. A fair chunk of people won't have, is my belief, because humans are terrible with discipline in all walks of life. We don't exercise enough, we drink too much alcohol, we smoke too many cigarettes, the list goes on, and traders in the world of trading, humans don't like taking stop losses. So even if you start off with the best of intentions and you're looking at this type of structure and you think, right, I'm going to sell off here, and you place a stop loss and then price doesn't follow through, you know, you start off with the best of intentions, but as it starts to come against you and squeeze that position, that's the moment which you'll cancel your stop loss. So oftentimes people start off with you know, the process in place to take a good trade, but the reality of losing money, the cold hard facts of that scenario, people can't usually cope with it that well. So they cancel, and imagine if the traders were holding that position, if that was you and you cancelled and you're up in this place here, you know, think of the psychology of that, right? Have a think about that. If you were that individual, I'm sure you've probably done that before. We've all done it. I've done it. That's how we know how to deconstruct the behavior of people in the markets. That's essentially what we do, because it's just a reflection of our own historical behavior, you know, and that's what makes it possible to do. So when people are looking at levels like this, you shouldn't just be considering what's sort of happening at the level. There's a lot more going on. There's a lot more information you're not gathering if you're not considering the fact that there's people up in here still losing money. That's a T drop from being short in here, and they're going to add to the supply-demand equation when price revisits that location. Because what will a trader do if you just think about that as the profit and loss line, right? And they've always been on the wrong side of that. That's the minus, that's the plus. They've always been on the wrong side of that. To get back to break even is now their motivation. That's all they kind of care about. That's not obviously everybody, but most people, when they're offside in a trade, so this being offside, right, the wrong side of that line, if they get the opportunity, and bear in mind we know that they've cancelled the stops, right, a degree of them, if that comes back into that level and they get the opportunity to bail out or break even, that's exactly what they're going to do. Why do we know that? Because we all do it, right? It's not magical or mystical. We all do it, and because of that fact, then we know there's going to be some demand in that location, because those people are going to bail out of their positions, i.e. their sell trades over here, and to do that they must buy to exit. So That's going to create demand, and then you're going to get a pop off that. There are several other reasons why you would imagine there should be some demand in here. If you'd like to learn how to get that information as well, feel free to click the link below and come and join me in my inner circle. It's brand new inner circle, and I'll share with you all my tactics for trading the financial markets in this manner. But yeah, this looks like a pretty decent place to get along. Take care, guys. Have a nice day.